Peter, let me start with you because Powell, at least to me, was very clear in his message, yet the market still doesn't seem to be fully buying in. Why do you think that is?
I actually don't think he was quite that clear. I think what he's clear to me is it's an extremely high hurdle for them to cut. So they're not going to cut. But I think it's actually a pretty high hurdle for them to hike even more than once. And I don't even know if they get there. I think they're going to be very data dependent. And when they say data dependent, they always have a bias. And for much of the last 2 years, the bias was any data that gave them an excuse to hike, they were going to take that. I think they're looking for any data that says, hey, we can wait another month, we can wait another meeting or two to do anything. That's what they're looking for. And I think the market's going to deliver that sort of mixed data.
Young Yu, what do you believe here? As we get another meeting or two, we get that much closer to next year and where the Fed ultimately decides where a hold or perhaps even a cut should be entering into the conversation?
Well, definitely still data dependent whether or not the Fed raises rates again. I think, as was mentioned, that cutting rates is a far out prospect at this point and really one that's off the table. And that's something that also markets are reacting to. But I think also the headwind in markets right now and why you're seeing that pricing in the futures market not believing that the Fed's going to cut rates is because I think the futures market is seeing all the headwinds right now that the economy faces with student loan repayments resuming, auto and credit card delinquencies rising, the looming government shutdown or possibility of that, high oil prices. I think the markets realize that these headwinds are very meaningful and real here.
Peter, sticking with what Young Yu just had to say about oil prices, right? Obviously, this could be a real challenge for the Fed trying to get inflation under control. How do you view that risk to the broader market and what that could signal even for the economy as well when you factor in consumer spending?
I think on oil prices, they're going to be very reluctant to try and deal with oil prices through monetary policy. I think they realize that doesn't work. It's not sure whether it's demand driven, whether out of China, maybe out of India, our own supply. I think they're going to be patient. You're starting to see domestic air travel slow. I think you're seeing the economy here slowing enough that they're not going to worry about it. I think you've got to be until January or February before they start looking at oil. Remember, last year it went up to around these levels as you headed into winter in Ukraine and Europe, right? They're going to still deal with that war. So I think it's an issue they're keeping an eye on, but only one eye at this point.
Peter, just to follow up on that, and of course, the Fed, as they had put it yesterday, at least in the commentary, coming out of their meeting from Fed Chair Jay Powell saying nominal wage growth has shown some signs of easing. Job vacancies, they have declined so far this year. Job to workers gap narrowing, labor demand exceeding the supply of available workers, and then also expecting this rebalancing in the labor market to continue easing some upward pressure on inflation. How quickly should we be anticipating or expecting some of that rebalancing in the labor market to persist and thus kind of be a driver of easing the inflationary pressure?
I think it's really going to be persistent right now. I think some of the data was overstated. So you've seen in NFP all these downward revisions. I did love the fact that you finally saw labor participation pick back up. And to me, you almost get this vibe out there that people who are sitting around saying, hey, I can get a job anytime I want, saying, maybe I can't. Maybe I better start looking for one right now. So I think the number of, these low-skilled, low-paying jobs are diminishing a little bit. People have moved on. So I think we're going to see weakness. I think we're going to see downward revisions. And I think that's going to be very supportive for the Fed to not do anything, at least.